Good afternoon. Welcome to Beat the Streets on this Friday, the 27th of October. Let's take a look at the headlines as we wait the start of today's Wall Street in around about an hour's time. We are getting some breaking news in just a moment. US PCE data. We're waiting the effects of that. The dollar in advance of this continues to climb. Let's take a look at some of the stocks worth watching. The oil sector very much in focus today. Exxon Mobil and Chevron telling two rather different stories in the markets, and one is up, one is on the way down. All sessions on the IG platform. More on that in just a couple of minutes' time. And Ford takes a hit from strike action. The UAW and Ford appear to have reached some sort of an agreement. We know nothing more than that at the moment. But the third quarter earnings out today from Ford, a bit of a disappointment. And the company also warning electric vehicle investment, especially at the high end, will be dialed back because it's seeing less than impressive uptake from people purchasing that type of electric vehicle. Now, let's take a look at the economic data that we are getting. And we're seeing core PCE prices come through with a reading absolutely in line with expectations of a 0.3% month-on-month number. This is up from the 0.1%. So that has risen, but it's not beyond any major reading. The annualized number for the PCE is coming at 3.4%, which is absolutely in line with the previous reading, but above the forecast, which had expected to drop to 3.2%. Now, you remember this time yesterday I was talking about what was going on with a slightly stronger than expected growth number. Well, this all adds up for me to telling the Fed that you've got to keep your foot on the pedal. Don't necessarily have to raise interest rates again, but I think certainly that you've got to keep interest rates at this sort of elevated level for a longer period of time. And what that does is it continues to cool the potential for inflation. And with high growth numbers, you have a good reason to keep things up. What we need to see now this time next week is the non-farm payrolls figure continuing to bring us some good numbers. Let's take a look at what's happening with the dollar basket. If we take a look at this chart here, these are minute-by-minute candles, and you can see here the way in which we've got, I think, mostly upside on the minute-by-minute. I want to take you back to take a look at what's happening on the daily candles, because this is a well-trodden path for those that have been with me all week on Beat the Street and indeed the early morning call. We've got here information which gives me the understanding that we've got this upward trend very much in place. It's been in place since this Andrews pitchfork was put in place. When was that? At the beginning or sort of middle of October. And the start of the pitchfork handle takes us up with this trend, and then came this disturbance. Now, many are saying, oh, it's time to sell the dollar. That didn't appear to be the case. And of course, we put this Andrews pitchfork on there, and you can see that it's traded within these bands, these upward-facing channels. And unless it breaks this rising line at the bottom here, this maintains itself as an upward-facing channel. Now, we got this most recent channel here, which is clearly the one where we are focused in on at the moment, between the lows that we had where it hit the 50-period moving average down at 104.91, which is this green line here, which is the low point of the lower channel, and it doesn't seem to want to escape the upper point of that channel. So I suspect now we've got this channel now in place, which could be interesting. So we've seen PCE come through, we've seen income come through, pretty much in line with expectations, a 0.3% reading. Personal spending is up, interestingly enough, up 0.7%. We're looking for a 0.5% reading. That, to me, just backs up this idea that growth is doing well because people are spending money. And they're spending money that they're coming in from a lot of these pay deals that are coming through, which have really been reinforcing this idea that these consumers are able to maintain a relatively good style of living, given the fact that inflation is rising, because they're getting pay increases, which is what all this UAW is about, the auto workers union striking for more money. This is the euro dollar. That rise we've seen for the dollar impacting itself on a downward trade for the euro, and this escape down below this rising line of support for me now indicates that at 105.45 we're heading for this line of support down here, which are the lows we had back on the 7th of March at 105.16. But that's a relatively minor line of support. Now, if I was short on this, and I'm not, but if I were, then 104.48 would be my price target, which were the lows we saw back on the 4th of October, and my stop loss would be on the upper side of this rising line of what is now resistance. So your stop loss at around about the 105.90 level, 106 level would be a good place for it. with a price target at 104.48. You got a breaker there, and then you're then on the way down to this line down here, which is the 102.90 level. It's not just against the euro that the US dollar is moving. It's also moving up against sterling in today's trade. You can see here this fall that we've had here and this little bit of a bounce. For me, it's just a question of when it breaks the 120.38 level. Currently trading at 121.15. 120.38 is the line to break, and then on the way down to the 118.05. Before we leave the foreign exchange markets, just want to quickly take a look at what's happening with the dollar against the Japanese yen. Now, the dollar is now down against the yen at 149.94. We have seen it up, and indeed yesterday there was pretty much an entire candle above that 150 level. I've not seen the evidence of any intervention by the Bank of Japan. We've got the BOJ interest rate decision next Tuesday, and it'll be interesting to see what comes out of that to work out where we are in terms of the dollar move against the Japanese yen. When you see the dollar up, you quite often see money coming out of gold. That's not the case at the moment. At 1985, gold maintains its position, and the price target on the way up here has always been this $2,000 level. This little bit of a pennant I drew here, it gave me a projection of 1986, which is pretty much where we are at the moment. So that is pretty much done and dusted. That, in fact, it was done and dusted actually on the last Friday trade. But the 2000 level is very much the price target. Beyond there, you're then on the way up to the record high at 2082. So that gives you a little bit of a flavour as to what's happening with the dollar and its effects on some of the other areas of the markets as well. So that's taken aside some of the economic data. What I want to do now is to take a look in some more detail about what's happening in terms of some of the stocks to watch in today's session. I want to begin with ExxonMobil. It's seen its shares up a touch after third quarter earnings. It posted a $9.1 billion third quarter profit, which is a 54% drop from record earnings a year ago, but up from the prior quarter. Oil prices recovering. Third quarter adjusted EPS $2.27. We've been looking for $2.36. Exxon boosting its quarterly dividend to 95 cents a share from 91 cents. And the earnings have benefited from strong crude oil prices that we've seen and demand for gasoline and diesel following the pandemic. Wall Street this month trimming its third quarter outlook after the company pointed to weaker chemical profits and refining margins. I want to show you what's happening with ExxonMobil shares. The stock is currently up 1% on the market at the moment, all sessions on the IG platform, so we've got an indication as to how it's going to open. Now, this is a company that has been doing deals in the oil sector. The buoyant results have led to two all-stock deals. First, the shale rival Pioneer Natural Resources, and for carbon pipeline operator Denbury, both struck at shares when shares were trading not too far away from this record high up here at 120.69. So it cost dearly in terms of the share purchase. Its cash reserves, though, continue to build, up by 10% over the second quarter to 33 billion. So the company is flush with cash, but it did these deals with equity. So we're looking for a rise at the start of today's trade for ExxonMobil, but Chevron shares under pressure today as a result of numbers we've seen out there. It's near to recent support after disappointing set of figures for the third quarter. Adjusted earnings per share coming in at $3.05. Estimates have been for $3.71. All this comes amid weak returns from its overseas refineries, and as the oil giant moves closer to the $53 billion purchase of the oil and gas exploration and production company Hess Corporation. These results on Friday followed this week's announcement that Chevron plans to increase next year's dividend by 8% and boost annual share buybacks by 14% to $20 billion. Now that, for me, is a positive stock story. So you've got to ask yourself, why is it on the way down? Partly, I suspect, is because this Hess deal is not unknown, but the deal has yet to been obviously proved to shareholders it's the right thing to do. We're very close to this line of support at 149.70. I suspect this is going to be one of those stocks as a drag on the markets when trade gets underway in a short while's time. Let's stay on the charts. I just want to quickly dial in another couple of stocks worth looking at. Amazon, I want to take a look at this because shares climbing an extended trade yesterday. You can see clearly the stock up last night after the company reported earnings and revenue that sailed past analysts' estimates. Earnings per share 94 cents. We've been looking for 58. That was a big beat. Revenue 143.1 billion. We've been looking for 141.5. Amazon Web Services a little bit of a disappointment at 23.1 billion. But advertising was up better than expected, 12.1 billion against 11.6 billion expected. And that was the reason why we saw this rise in Amazon shares late into yesterday. So it is a stock that I think is going to produce some positivity when the markets open at 2:30 UK time. Let's keep on with the share price charts because I want to show you this as well. This is Intel. Now, this had a very big positive effect late last night on the markets in the wake of the numbers. I'm going to show you the hour by hour chart just to show you exactly what happened out of the gate when we saw these numbers last night after Wall Street closed. Earnings per share, 41 cents, 22 was expected, so that's almost double. Revenue, 14.16 billion. Estimates have been for 13.5. Seventh consecutive quarter of declining sales, but the chipmaker telling investors it expects growth to return in the current quarter. The chief executive, Pat Gelsinger, also told analysts, and this is another reason why we saw this stock up in the session yesterday, the company's going to cut costs by about $3 billion this year, having already slashed workforce costs with staff numbers down from 131,500 to the current role of 120,300 staff members. So that is already good news for Intel. And moving on to what's happening with Ford. Ford share price late yesterday, look at this, tumbling right out. The declines we've seen recently have been as a result of the strikes, the UAW strikes, and its impact on the company. Ford telling the same sort of story we had from General Motors earlier on in the week. We've got Stellantis next week, which is another big US auto manufacturer. That's likely to tell the same sort of story. And they're very similar sort of share price traded. Today, in all sessions late last night, we saw a piercing of this line of support at 1090, which took us then down to levels there not seen since the intraday lows on the 5th of July 2022, and very close to the lows not seen since January 2021. Ford in all sorts of trouble because of the strikes. It's done this deal this week. We don't know yet what the outcome is. If the unions don't accept it, they go back, and there's another problem. The big plant in Kentucky was hit hard by this, one of the big truck producers in the States. And the company has had all sorts of difficulties. It saw adjusted earnings per share 39 cents, 45 cents have been expected, and revenues down on what had been looked for. So also Ford, I have to say, whilst looking at the share price chart, it's also considering the fact that Ford is delaying about $12 billion in planned investments on electric vehicles, including construction of a second battery plant with joint venture partner SK On, due to softening demand for higher priced premium electric vehicles. And that's taking a look through some of the stocks to watch. Just wanted to quickly wrap up with a look at where we are now. The markets have had a chance to settle in terms of some of the moves on the equity markets. Let's go with the Wall Street benchmark, the Dow Jones Industrial Average. Today, we've seen a new lower low, intraday lows not seen since the 25th of May. I've got here on this line here drawn this line of support at 32,584. We're currently trading just a couple of 100 points above that level. But if we get a break of that line, I don't see much then technically stopping us going all the way down to 31,430. Now, the Dow is not as bad as some of the other markets, it has to be said. Look at the S&P 500. We've now got two complete candles below this prior line of support at 4,200, which was broken on Wednesday. That was a big, strong candle on the downside. So that obviously looked like markets were determined to continue on the downside, well below the 200-day moving average. At 41.50, we've got a 41.03 line of support to watch out for. The next line then down is at 4,046, and I suspect as we've seen this recent line of support taken out, that those could be the next lines to watch out for. So if you're short on this, stop above recent price action with a view to taking it down and making profits on the way down with these markets. The Tech 100, the Nasdaq Tech 100 as well, breaking that line of support a couple of days ago, and we are now consolidating at the point at which we closed out yesterday's session at 142.17. The Nasdaq in yesterday's trade not too far away from the 200-day moving average, down at levels not seen since the 26th of May. So the message I want to leave you with as we go into the Wall Street trading day in 45 minutes time is that we've got a fairly mixed bag of stocks for you, but certainly looking for gains in Exxon Mobil today with losses for Chevron, but gains in Intel and gains in Amazon beating out those losses we saw in Ford last night. So mixed bag. Interesting looking at the start of today's trade, looking for losses across Wall Street, though. That's the net effect of what we've got. Concerns about the outlook for interest rates, and that's what I want to leave you with as we look into the start of today's trade for the US markets in about 45 minutes' time. I'll be back at 4 o'clock with a look ahead to next week's trade.